I want to quickly talk to you about how to get a business loan with bad credit. Don't go anywhere. Welcome back, folks, to another edition of the Awesome Sweetie Kiwi Show. How are you today? I hope you are doing fantastic. I'm doing marvelous, if you were to ask me. If you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. In today's conversation, I want to give you a logical methodology to get a business loan with bad credit. The thing here is that before we get into nitty-gritty, the first step I want you to focus on is to understand the concept of business credit score and business loans. Do you need a business credit score for a small business loan? The answer is it depends, really. Because if you've been in business less than a year, you will not have a business credit score. That just makes sense because credit reporting agencies don't have enough information about how your business manages debt yet. Instead, lenders will look at your personal credit score to determine if you're qualified for a loan. And generally, traditional lenders, here I'm talking about banks and credit unions, will want to see a minimum personal credit score of 650. That's just the threshold here, the floor, the ground floor. And they want to see that before approving you for a loan. And many require a score of 680 or more in our research, according to our research. And if you've been in business for more than a year, lenders will consider both your business credit score and your personal credit score. Okay? And traditional lenders will weigh your business credit score more heavily, while alternative financing sources, here I'm referring to online lenders, they will focus on your personal credit score and financial indicators such as your business's revenues or receivables. So that's number one. How do you boost your odds of approval? If you want to be approved for a business loan with bad credit, you really need to follow these steps. First, you want to check your credit score. And I'm referring here to your personal credit score and your business credit score. And you want to get copies of both credit reports. You want to review the reports for any errors, and you want to contact the credit bureaus to dispute any mistakes you find. Think about it. One mistake can cost you thousands of dollars in additional interest, right? So knowing your credit score, where that credit score stands, can help you determine the types of loans for which you're most likely to qualify for. Okay. And you want to research your options. You want to write a business plan. It's very important. Some lenders ask they will ask for a business plan as part of your loan application. And even if your lenders does not require one, writing a business plan is a smart move. If your poor credit score stems from money management problems, having a well thought out business plan will help you keep from making the same mistakes with your business finances. Okay. And you can actually get a free piece of advice, if you will, on your business plan from expert consultant SCORE. This is a service course of retired executives, or your local small business development center. And if you want to do the DIY approach, there are a lot of templates on the internet. You can also provide collateral. This could be a good way to actually boost your odds of approval. And last but not the least, find a co-signer. If you want to get a business loan but you have bad credit, see if you can find someone with good credit who is willing to co-sign the loan for you. Since this person is actually guaranteeing that they will take over the loan payments if you can't, it's critical to make sure that they can afford to do so and that both of you are truly comfortable with the arrangement. Let me talk to you about the types of business loans for bad credit. When people are talking about business loans with bad credit, what are they really talking about? There is a constellation of business loans for bad credit. First, we have business credit cards. Yes, they are loans, okay? Because using a business credit card not only gives you access to capital, but also can help you improve your business credit score if you make your payments on time. Consequently, a business credit card can be a good funding option for a startup business or an established business that needs to build a credit history or to repair their credit history. You also have short-term loans, right? So those both traditional and alternative lenders, they offer short-term loans, which generally have terms from 6 to 24 months. So instead of a fixed monthly payments, some lenders automatically withdraw payments from your business bank account daily, weekly, or monthly. It's just a way for them to mitigate the risk of you not paying them back. All right. You have also short-term lines of credits, and those offer similar terms to short-term loans, except that they are revolving credits like credit cards rather than installment loans, which require fixed monthly payments. You have invoice factoring. So if you have a small business that has unpaid receivables, you can turn those into cash using factoring. And factoring companies buy your unpaid invoices from you for a percentage of their value, typically at about 80 to 85%. And the factor collects payment on the invoices from your customers and pays you the balance on the invoice minus the factoring fee. And you have also invoice financing. This is totally different, as a little different from invoice factoring. And invoice financing, you, instead of buying your invoices, the financing company advances you the value of the invoices. So you are responsible for collecting payment from your customers and paying back the loan and any related fees. You also have equipment financing. This is another option where, let's say, if you need to buy equipment for your business, equipment financing will help you purchase the equipment using the equipment itself as a collateral. This is kind of like a car does for a car loan, right? And this helps to keep interest rates relatively low, although those with bad credit will pay more interest. You also have microloans. Those are for loans that range anywhere from $500 to $10,000. Although we've seen the microloans go as high as $50,000. Right? It really depends on the situation. And those loans are generally provided by nonprofit organizations such as Kiva, right, or Accion, ACCION. You also have merchant cash advances, collateralized loan, and you have working capital loans. Now, working capital loans are used to finance everyday business operations like wages, inventory, taxes, and a range of other costs that keep your business going day to day. And the thing here is that, unlike some other types of loans, they're not used to pay for investing or other long-term assets. Before you actually apply for a business loan with bad credit, I want you to do this. Do this before, folks. I want to emphasize the word before applying for a business loan with bad credit. There are a few things. First, you have factors that impact your approval odds. There are 3 factors: the type of lender, your personal credit score, and the age of the business. So, in terms of age of business, for example, traditional lenders typically ask for 3 years worth of tax returns and financial statements as part of your loan application. So if you've been in business for less than 3 years, you're likely to have trouble getting a loan approval from these lenders. So you want to really switch your attention to alternative lenders because those have less strict requirements for the age of your business. In fact, many will cater to fledgling businesses, startups. So those are for the factors that impact your approval odds. You also have factors to compare when choosing a loan. There are 4 important criteria that you need to compare when choosing a loan. The first criterion is loan term. So short-term loans are generally for 24 months or less. Mid-term loans are typically for 2 to 5 years. You have to think about the interest rate and APR, very important. The third criterion is the loan limits. It's harder to get a second business loan when you already have an outstanding loan. So try to get a loan that provides the full amount you need, and so you won't have to reapply again to get funds elsewhere. And the fourth criterion is the loan fees. So make sure you understand all the fees involved in your loan. So this may include origination fees, underwriting fees, closing costs, late fees, and factor fees. And you also need to consider certain factors that the lender think about. So here are the factors that lenders consider. Knowing those factors will help you actually get approved. So lenders will consider annual revenue, cash flow, current debt load, business plan, and the loan purpose. In any case, folks, if you want to have a business loan with bad credit, you need to solidify your business plan. You need to craft a solid, rock solid business plan, because traditional lenders as well as alternative lenders will review your business plan looking for a sound business model, a strong management team, and realistic financial and sales projections. Very important. So I was talking to you before about what you need to do before applying for a loan. Now I want to talk to you about what you need to do when applying for a loan. Okay? And the thing here is that there are a few things. If you're looking for a business loan and have bad credit, there are myriad factors that may influence your approval odds as well as the terms of your loan. So you need to think about the relationship of personal credit to business loan approval. You need to really understand that. And is that important to the lender you are considering? If that's important, then you want to have a conversation with them and see if they can actually help you out. In other words, if you have bad credit personally and you have good credit on the business side, you want to actually talk to the lender about that relationship of personal credit to business credit. You need to understand the relationship between credit scores and interest rates. The thing here is that business owners with great credit history generally receive the best interest rates on their loans. If your personal or business credit score is low, that's a greater chance your loan will include a higher annual percentage rate, APR. And but by talking to the lender, you might be able to actually reduce that rate. You have to also think about, or at least understand, as you are applying for a business loan, the difference between online lenders and traditional banks. So traditional banks like banks and credit unions, they tend to have stricter policies and eligibility requirements for loan approval. They also tend to be slower and require more documentation. So the risk continuum there is kind of more stretched. So whether you have above average or less than perfect credit, here are just a few benefits of alternative and online lenders compared to traditional lenders. So for online lenders, they have fast turnaround times, less documentation required for approval, faster access to funds if approved, flexible terms that meet your specific needs as a borrower, and higher approval rates. You also need to think about the age of business and startup businesses. So you have to also think about, there's another thing I want to say here is that traditional banks tend to lend to well-established businesses to reduce their risk, right? And as a result, younger or startup businesses may have a harder time meeting a bank's strict lending standards. And I also want to talk about business loan cost. If you are trying to get a business loan with bad credit, you need to know the cost. And there are myriad costs again. I want you to think about the APR, the down payment required. Now, down payment requirements may vary between lenders, but some will ask you as high as 25%. Think about the factor rate, the origination fee, the underwriting fees, the closing cost, and other fees, such as check processing fees, prepayment fees, and late payment penalties. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another section of the Awesome Sweetie Kiwi Show. We are still having a conversation about how to get a business loan with bad credit. And number 6 here, I want to talk to you about how to get a business loan with better terms. If you have a bad credit, chances are you're not going to get the best of terms. But with a few tricks, there are a lot of stuff. There's a lot you can do to actually reduce your APR. Actually, there are 5 of them. First, you want to improve your credit score. That's just logical, right? So start paying your bills on time. Let's say if you need the money, let's say within 3 months or 6 months, start paying your bills on time and start by bringing any late payment current as soon as possible and disputing any errors on your credit reports. Very important. Next, you need to build your business credit. So after you've made sure your business credit report is accurate and brought any late payments current, you need to work on building your business credit by getting business credit cards, and using them responsibly. Make sure any business credit cards you use report your payment history to at least one of the three major business credit reporting agencies. So here we have Experian, TransUnion, and Equifax. See if you can get trade credit from your suppliers, and you want to ask them to report to the credit reporting agencies. Very important, because even a very low trade credit limit can help. So by helping pay your bills on time, you are improving your credit score and you are encouraging suppliers to extend more credit. You want to reassess your business plan. So if there are other ways you can actually tweak things around in your business model to increase sales or cut costs, go ahead and do it. Either tactic can help reduce the amount of financing you need. You can also ask lenders who turn you down to give you feedback on your business plan, right? It doesn't hurt. So use what you learn to revise the plan and make it more appealing to lenders in the future. A fourth criterion you can use to actually get better business loan terms is collateral. Provide collateral if you can. All right. So it can be invoice finance. You can use invoice financing. You can use invoice factoring. You can use equipment financing. And last but not the least, think about using a cosigner. A cosigner is typically an individual with a favorable credit score or a steady source of income who can handle making loan payments if the primary borrower becomes unable to do so. Now, let me give you specifically some of the things you can do to get a business loan with bad credit quickly. The one thing you need to do here is you need to actually understand that your personal credit score does play a role. Whether or not you have a business credit score, you need to think about your personal credit score, because this is how you can obtain the capital you need to develop and grow a successful business, even if you have bad credit. So know your personal credit score. You want to check your personal credit score, reach out to Equifax, TransUnion, or Experian, actually all three of them. Not either or, but all three of them. You want to actually research your options based on eligibility requirements. So for each type of financing, there are specific requirements you have to meet to get approved, right? So things like years in business, annual revenue, personal credit score. You want to choose the best option for your business, and whether it is an online lender or a traditional lender. One thing that a lot of small businesses don't actually do is they actually ignore the local bank. You need to actually establish a relationship with your local bank, because this relationship might come handy. And who knows, you might get the loan that you need there. And you also need to actually know how to find the best loan for your needs. The thing is, you have to think about short-term versus mid-term repayments. What are actually your decision to obtain financing for your business is important. So there are a few factors to consider when evaluating your different loan options. So you have short-term versus mid-term repayment. You have to look at your financial situation, your company's financial situation, and see what works for you. You need to think about the interest and fees on open balances, right? So you need to assess how much interest and fees you will be charged on open balances. That's, for example, if you have a line of credit, right? If you take out a longer term loan, the amount you have to pay each month may be lower. However, you might wind up paying more in the long run. So if you take out a short term loan, you probably have higher payments but less total interest on the loan. So it really depends on your situation. Think about the loan limits also. So if a lender does not extend financing in the amount your business needs, consider turning to creative funding sources, or look for ways to cut costs and reduce the total amount you need. And one thing I want to say here is that I want to show you what lenders look for on a loan application, especially on a business loan application for bad credit. They look at the things like annual revenue. They look at profitability. They look at your current debt obligation, so the current outstanding loans you have. They look at the business's cash flow. They look at the credit history. And then most importantly, they look at the business plan. Very important. Very important. Business plan may show lenders a variety of things that set your business apart, including your unique value proposition, your marketing strategies, the leadership team, and revenue and profit model. Okay, and your business plan should be presented in a concise yet detailed manner that clearly explains the amount of funding you need and why it is required. So now, I really, before I close this conversation, I really want to give you a pro tip here. This is based on our research, and we have actually we have researched this topic of business loans for bad credit. We have researched this topic extensively, and I just want to give you a few tips here how to get a better business loan in the future. To qualify for a loan with better terms, you need to demonstrate that you are a responsible borrower. So if you're denied a small business loan for bad credit, or you think you'll need to borrow again in the future, use these ideas to improve your chances of obtaining a loan with better terms in the next time you apply. So first, improve your personal credit. Very important. So always make payments on time, keep balances below the 30% of your total credit limit. This is your debt to income ratio, very important. You also have the credit utilization rate, the CUR. So your CUR has to be below 30%. Don't open too many new lines of credit at once. And you want to actively monitor your credit score and dispute suspicious or false activity. Okay? And the thing here is that all the three major credit reporting bureaus, Experian, Equifax, and TransUnion, they offer a range of free services to help you monitor, manage, and improve your credit score. Okay? So you want to visit each of their websites to check your current credit report and ways to improve it. You want to establish and build business credit. You have to understand, building your business credit is one of the best ways to improve your eligibility for a business loan, because it kind of helps you if you really think about it. Because establishing business credit can take some resources and time, but when done properly, it pays off big time. And I mean it, big time. So establishing business credit usually involves incorporating your business, getting a federal tax ID number, opening a business bank account, right? And securing various lines of credit for your business. The thing is, even if you don't qualify for a small business loan, guess what? You may still qualify for a business line of credit or a bad credit business loan, which could improve your chances for a loan over time. So it's all good, right? Like all credit though, you want your business's credit to remain in good standing. You also want to assess your business plan. I already talked about that. You want to prove your credit worthiness, and you want to get creative with funding option. When it comes to your funding options, you want to actually, because even if you are approved for business loans with business loans for bad credit, you may not secure the full amount you need to grow your business as quickly as you had imagined. So the good news is that after you secure and pay off your first business loan, your improved credit score may help you qualify for business loans with higher amounts or better terms in the future. So if you need additional funding to realize your vision in the future, you can consider asking family, friends, or private investors to invest in your business. This is very important. All right, folks, this was it for today's conversation. I really appreciate your attention here. I was talking to you about how to get a business loan for bad credit. And I spoke about business credit score and business loans, how to boost your odds of approval, the types of business loans for bad credit, things you need to do before applying for a business loan, things you need to do when applying for a business loan, how to get a business loan with better terms, how to get a business loan with bad credit, loans that are based on business needs and credit score, how to find the best loan for your needs, and what lenders look for on an application. Thank you so much for your attention. I really appreciate it. I will see you next time. But until then, remember, stay marvelous.